And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets. And despite the end to the market, we did have a very strong end. We had a lot of developments take place last week yet again as it relates to economic data. Consumer confidence came in above estimates, and that's always good because the consumer spending is two-thirds of GDP. So we do want to see some expansion among consumer spending. Weekly jobless claims came in lower than expected. That was good news for the markets as well. Q2 GDP was revised higher to 3% due to that consumer spending. And then also we did see today that core PCE data, and this is the data that the Federal Reserve looks at very closely as a gauge for inflation, and it did come in at estimates, and the markets like that generally. And as noted, there was a pretty sharp move into the close today as we head into the long weekend. Let's take a look at what's coming up next week in a holiday shortened period. We will get July employment data for actually August, forgive me. We will get August employment data, and that is the Federal Reserve has made it very known that that is very critical to their decision making. So expect volatility surrounding that next week. From here, let's go ahead and take a look at some of the other shifts that are materializing beneath the surface. We'll take a close look at NVIDIA for those of you that want a short and longer term view, and lots more. And here we are with the daily price chart of the S&P 500. And what I am highlighting here is that prior high from mid-July of 5670. And we are back after today's nice 1% rally, inching closer again. We're at 5648. And the reason I'm highlighting this is because, as you can see, with this back and fill volatile period, a lot going on relative to interest rate possibilities and earnings, but net, it is viewed as resistance. We've seen these index go up close and pull back. So ideally, we want to get above that 5670 and then from there have a nice advance. We have that RSI in positive territory, and likewise with the MACD. So at the end of the day, we are remaining in a confirmed uptrend with the S&P 500. Now, from here, I do want to point out this is an index we looked at last Friday as well, an equal weighted S&P 500, and we did close at yet another new high. It certainly outperformed the heavier weighted tech and magnificent seven groupings that are in the normal S&P 500, and this is equal weighted. And then we can see that RSI is positive and MACD, and this is telling us that there is broadening out that's continuing to shape up in the markets. We want to see that so that we can have most boats lift with this market. Here we are with the Nasdaq, a daily price chart, and we did close below that 50-day. This is that red line on 2 days, on Thursday and Friday. And then today we just inched above it. And I just want to make sure, yes, we did, good news. And also we now have a RSI that was very close to turning negative. MACD is positive. So we are somewhat clinging to, but positive outlook here with the momentum on the tech-heavy Nasdaq index. From here, as usual, let's take a look at these 11 sectors in the S&P 500. And what I do is share with you a 2-month daily price chart view. We have that relative strength indicator, sort these sectors by strength, and take a look. If you follow this show each week, welcome back. And you will know that over the past several weeks, we've had a bit of a defensive feel as far as those industry groups and sectors that are up here at the forefront showing relative strength. Quite simply, healthcare, utilities, real estate, and staples. Now, we did have financials up here, and they have been strong of late. Take a look at this advance. Now, not all of this. We'll take a look at the banks. They're doing okay. but a lot of this is general insurance names. And as we move through, I'm going to share with you names from most of these sectors and give you a really good sense of what is working underlying within these groups. And moving right along, we of course want to take a look because technology is down here at that lower quartile again. And this is a sector that turned negative back here with that close below that 50-day. And we did have a negative RSI on Wednesday, and we were able to recover that into today's close. So we have positive momentum with that RSI and MACD, but we are still muddling around here below this key 50-day simple moving average. So it's an area to step carefully in. Or if you have holdings, keep a close eye on them. And then also over here on the weaker area is consumer discretionary. It did end the week again on a strong note, but it was underperforming for the week overall. Closed above that 50-day. We have a positive RSI and MACD. Amazon certainly ended with a bang, and I believe Tesla did as well. We'll take a look at those stocks going forward. From here, let's go ahead and take a look beyond these sectors into sub-industry groupings. I use select ETFs that are really helpful as far as highlighting where that strength is. Again, that relative strength indicator, and take a look. This is a group that we spent quite a bit of time on last week. IHI, that medical devices ETF, continues to expand higher. And when you see this type of, just take a minute here and highlight this, because when you see a base breakout, in fact, we could even go back further, and the longer your base prior to that breakout, the longer your potential advance. So here we are with the 5-month base breakout on IHI and that medical products. We'll take a look at one of the better performing names in that group this week. Let's go ahead and move forward and take a look at banking. We talked about XLF, and this is KRE. It's the regional banking ETF, and the group underperformed for the week, but you can see setting up nicely. This is another area that we talked about last Friday where they had that gap up into the week close and a very orderly pullback. So there's certainly a lot by way of names that are setting up here very similarly after last week's big advance, having a nice period of consolidation and potential higher move. Bank stocks do fare well in a declining rate environment, higher loan processing. Now, let's take a look at some of these other sub-industry groupings. XHB is the home builders. It was up about 9% last week, but again, very orderly with a pullback to this 10-day simple moving average. This is XHB, the home builder ETF for the S&P, and I'll share with you a name that's setting up in a very similar fashion in that group. And of course, moving through, you want to be aware of where that relative weakness is. And first up, I will share with you XRT. That is the retail ETF that is struggling despite consumer spending showing positive signs. We can see this pullback here. It's an area that really had a sharp outperformance in February, but since then has really struggled. It's a very mixed group. And also what we want, I will share with you some names that are working in that area, but we really, for me, I want to stay on top of semiconductor stocks, because if we take a look at SOXX, for instance, from November into March and then April into July, clear-cut outperforming. It has that capability when it gets going to really outperform. So I'm keeping an eye on it because we had a huge drop off here into the beginning of this month. Nice recovery, but then stalling. So let's take a look at some of the metrics here. We are below a downward trending 50-day simple moving average. Now, we can go back to this period in October into November, very similar, where you're trading below a downward trending 50-day. And what is that signal? That downtrend has truly been reversed. It is going to be a move back above that 50, which I'll take a second here and mark this up. In essence, you're on the lookout for these shorter term moving averages to begin to trend upward and then eventually bringing that 50-day up as well. And also that nice MACD crossover, black line up through the red, signaling a new uptrend. So we do still have work to do before the semiconductor group. We do have a nice positive RSI as well. So little mixed, but keeping a very close eye on that again because of its potential. And as we are speaking about semiconductors, let's take a look at NVIDIA. For a lot of people, it is probably a large part of your portfolio if you got in early and you've stuck with it. So I'm going to share with you two different views for NVIDIA so that you can stay on top of the outlook. So we're looking at NVDA on the daily here, and a couple of things worth noting. That is the fact that NVDA did close just below its 50-day simple moving average. The RSI is negative. It's down there at 49. And we can see that MACD, it's positive, but it is poised to have a crossover. Now, the only reason, and certainly I own NVIDIA, I don't want that crossover to take place, but we do want to look at historical precedent when that takes shape. Back here in March, it was short-lived and then did go down further. In essence, when you do see that occur with this stock, again, historical precedent, you can see that you oftentimes will at least get a period of consolidation, which would not be out of line here, given the year-to-date advance that NVIDIA has had. So on the daily chart, mixed, we're below the 50, the RSI is negative, and we have a positive MACD. So before turning bullish, we're going to want to see a move back above that 50-day, get that RSI in positive territory, and have that black line not descend further below that red, which is the MACD signal line. So from here, let's go ahead and take a look at a longer term weekly chart. And this is what I pay close attention to because I have several names that I'm in it for the long haul. I've owned NVIDIA for a couple of years now. And when you're looking at the weekly chart, it is going to be the same indicators, but a little different in the sense that here we are with that RSI. Here's that pullback that took place in semiconductors. And you can see that we did not get that RSI into negative territory. We do have that black line down through the red, but I talked about that does not mean a downtrend is imminent. There are periods certainly, such as back here before we had that breakout in January, where you have a back end fill, and it's during a period when the MACD is trending downward. The time to get concerned would be if we see on the weekly, this is for longer term investors, if we see that RSI dip below that 50 level into negative territory, and then we marry that with a close below that 10-week, which is your 50-day simple moving average. Pay attention to that volume. You're getting high volume selling, which means distribution. And then last up is that MACD black line down through the red. So at this point in time, we are still in good standing, and I'm on the lookout for more potential sideways price action. But of course, as always, we'll keep a close eye on NVIDIA. Also from here, we're going to take a quick look at those magnificent 7 names. And here we are with that RSI descending order. And up here at the forefront is Netflix, where it has been. But take a look. This is another stock that is behaving in an orderly, bullish fashion. We had this sharp advance, and this is a period of consolidation as it digests that advance. So on the lookout, we're trading it at about 701. So on the lookout for a 703 breakout of this back and fill period of consolidation. And we have positive momentum there. From here, we can take a look at some of these other names that are mega cap. And you'll see that most of them are below their key 50-day moving average. Here's Amazon. They were up almost 4% today. However, we are still below a downward trending 50-day simple moving average, but we do now have a positive RSI. So it's on the radar. I'm going to keep a close eye on that. And then as we move through, and let's take a look at Apple. They are due to have their new product development announcement over the next 2 weeks. I'm not exactly certain, but it is in the beginning of September. And the anticipation is there that they are going to come out with the new product that could really help the stock. It is one of those few M7 names that is trending upward above that 10-day simple moving average. So let's take a look. I mentioned that I would share with you names that are looking interesting. We can begin with technology and Intel, and it is not a pretty chart. I certainly have to acknowledge that, but it was up 9.5% today. And the reason was because apparently, according to Bloomberg, the company is in talks to sell their foundry business and other divestitures. They've already, on August 1, announced a staff reduction. So they're trying to turn things around. Now, I will tell you, it is very negative as far as how much they are losing in money. It's not a stock I would tell you to pile into, but it's more of a note of interest. It's traded now back above that 21, coming out of an oversold position, but we do still have negative momentum as well. But it was one of the top performers last week. Let's take a look at a semiconductor stock that is, in essence, bucking that semiconductor downtrend, MRVL. And the company came out with numbers, and take a look, gapped up 9% on that report with super high volume. This is all about their sales of AI-related chips, which in turn is really propelling the company's earnings and sales and their outlook. So it's definitely one to have on the top of your list when those semiconductor stocks come back into play. Another industry group that we can take a look at, I mentioned financials were on the move higher, and this is going to be more thematic as far as where that relative outperformance is. This is EZCORP, EZPW, and you can see we had a nice base breakout today, nice volume characteristics, and the company is consumer facing, but from what I've read, they do have a number of pawn shops throughout the US and I believe Mexico. So really indicative of perhaps people struggling in this high inflation rate environment. And then AFRM, Affirm Holdings, is another name. We can see we had this nice gap up on earnings, super high volume. Now we have a positive MACD that we can marry with its overbought RSI, but we can see the stock does have that capability to continue to advance despite being overbought. Last up, we're going to take a look at Allstate, tried and true insurance company, and you can see that we had this nice base breakout period of consolidation, and we are now in a new confirmed uptrend. This is indicative of what we're seeing in that industry group. Next up, let's go ahead and cycle over to healthcare, and we can look at the couple of names I talked about, IHI, medical products. And here's an example. This is Cardinal Health, and it's a stock that I talked about 2 weeks ago on that gap up on earnings. So as we are seeing, earnings season is for the most part behind us, but you will want to keep something dynamics such as this in the back of your mind. If you see a stock exhibit a gap up on heavy volume on earnings, and we can see where that MACD is now trending upward, nice high volume indicating accumulation, and then a period of consolidation, and then another leg up. So also noted here is that phenom where once you get these shorter term moving averages trending upward, it eventually will pull that 50-day up with it and give you a nice longer term positive outlook. Another healthcare stock that we can take a look at that had a good week this week, and it is among, or I would qualify it as a possible downtrend reversal candidate as well. Here we are with their gap up above this 200-day simple moving average. The stock is poised to break out of a 6 5-week base. We can see positive momentum here. So when these stocks, for instance, with Bristol Myers, went from 40 all the way up to 50, that's a 25% move. And it will need that period of back and fill and base filling. So at this point in time, if we can get above that 51, nice base breakout, you have nice positive momentum there. Last up in that healthcare space, I talked about products, medical products, and RMD was certainly a top performer. It had this big gap up, super high volume on the advance, and it now is forming what could be a high tight flag, a bullish tight flag formation. You certainly in this environment, and you don't want to chase names, but could be of interest. Let's look at XLI Industrials. First up, I am going to share with you a rail stock. We're seeing some vibrancy in this group. This is Norfolk Southern. NSC had this nice base breakout into an uptrend with that MACD confirming that new uptrend and a positive RSI. Also in industrials, two other names. This is Construction Partners, ROAD, and it is another stock that is on the verge of breaking out of a base. But as much as anything, it is just indicative, what I'm sharing with you, as far as what's working in these sectors. So here we are with EME, Emcor Group. You can see that we're just on the cusp of a $400 lengthy base breakout. Your MACD just entering into positive territory with that RSI trending upward in positive territory as well. And last up, XLY. We talked about consumer discretionary stocks struggling a bit, but let's take a look at some of the areas that are faring well. And in particular, a smaller home builder. This is GRBK, and you can see it's very much in line with XHB. And this is what you'll see where it pulled back very orderly to this upward trending 10-day simple moving average. Still has positive momentum shaping up there. So it's another area I would urge you to drill down further. We did have a base breakout last week in a certainly well-known name. This is Costco, but it has pulled back subsequent to that. But again, it had a nice advance from this really low level up to its peak. So very orderly type of pullback there. And then last up, let's take a look at a company that came out with earnings back here. And you can see it had a gap up, continuation rally. And again, when you're looking at these companies that are coming out with strong earnings, such as Sharkninja, when you see that super high volume, that is just indicative of buyers coming in. We can go back here to this period and see the subsequent advance. So high volume on the gap up into a base breakout, and then very orderly, a period of back and fill as the stock digests that big move. And then today, another breakout from that flat base and nice volume. And that's it for this week. I hope you have a fantastic long weekend. Go ahead and put some questions down below if you have any. And then also, if you like what you've seen, hit that like button. You can also trial my twice weekly MEM Edge report by using the link below. See you next Friday.